Let's then move on and talk to the management of Satin Credit as well. The profits have doubled in first quarter, and they've also seen a strong NII growth in the first quarter. HP Singh, CMD of Satin Credit Care, now joins us on the show. Great to have you with us, Mr. Singh. First up, let's talk about your profits that have doubled, and NII growth also has been very strong at 84%. If you can tell us what has led to strong NII as well as profit performance this quarter.
Good morning. So, for us, it's been an impressive quarter as compared to our corresponding quarter in the last year. Our profits have, in fact, doubled, so 100% growth on our PBT from about 18 crores to about 36 crores is what we've done. For us, it's been an expansion and a consolidation mode in the first quarter, after our impressive performance in the last quarter of FY16. We've increased our branch network to about 100 more branches which have been added to our network. We've increased our employee strength, and we have now about 1,000 more employees on our rolls now. For that, that is probably one of the reasons that we've had a 62% year-on-year growth from the first quarter of the last year in terms of our AUM. And looking at the clients, we've increased from the quarter of the last year, FY16, from about 1.8 million clients, we've increased that to about 2 million clients now.
Mr. Singh, morning, and thank you for patiently waiting by. So much to discuss. Your Q1 margins, what did they come in at this quarter, and what are your margin drivers?
So margin drivers have been efficiency in terms of our operating efficiency, in terms of our loan officers, in terms of how they actually handle the number of clients which we've done. We've also moved projects into the cashless scheme, where our collections to a large extent have gone cashless. Close to about 25% of our collections are now cashless in terms of our branch network, which actually leads to some points of operating efficiency in terms of our deliverance. And that is probably one of the major reasons why we've been able to really improve upon our operating efficiencies moving forward. And that is probably one of the reasons which have given us some impressive performance in terms of our profitability.
Okay, let's also talk about your loan book and the growth here. Which segments contributed most to the growth within the MFI, SME as well as LAP?
It's majorly been the MFI sector for us, where we've done the growth overall. The SME sector is fairly new as a vertical to us. In fact, the SME vertical just started about 4 to 5 months back. We've just built up a book of about 8 to 10 crores over there. Majorly it has been the microfinance sector where the growth is coming in. We've also now gone a little bit deeper into newer states like Gujarat and Maharashtra. We've also picked up a little bit more in terms of our deliverance in loan in Rajasthan. So that is where we are probably focusing more on in terms of our loan growth in the microfinance sector.
And while we're seeing provisions dip sequentially, what is your gross and net NPA in Q1? Are you seeing a rise in gross NPAs going forward?
They've been steady in the first quarter in itself, but I think the first quarter is not a clear-cut picture in terms of how the gross NPAs will probably move. But it's fairly been steady, even if you look at the first quarter in itself. I think they'll remain steady fairly over the next 3 quarters also. They remain at that because the strength of the group model is technically which is there as probably the basic basis for such a good portfolio quality.
Okay. Let's also talk about then what is the stress that you see in NPAs and the provisions as you shift to 90 DPD?
We are now focusing only on 90 DPD right now. So the shift has already
see NPAs and the provisions as you shift to 90 DPD.
We are now focusing only on 90 DPD right now. So, the shift has already happened for us. So, even after the shift, I think the NPA has still remained steady. So, I think, this is going to be fairly stable over the long period of time. And with the monsoon rains probably being fairly good enough, and if you look at the general outlook as such, I think the NPL will not probably have any kind of stress in any possible form in the next few quarters also.
You can actually catch your net interest margin number. What is it at?
It's, I think, our NIM has expanded to about 12.1% from about 9.9%. And that is what we really look at. So that's from FY16 it was about 9.9, close to about 10%, which has expanded to about 12.1%.
And what is the loan growth outlook percentage-wise? Just a quick call.
As per the quarter of the corresponding year, the previous year, it's been a 62% growth from there. And we've given our guidance for this year for a 60% growth from FY16 to FY17.
Okay, thanks very much for joining in and giving us a perspective on your numbers as well as the outlook going forward. Encouraging said indeed on account of the profits as well as NII growth, the stock in the green. To some more news then, and let's get in some exclusive details from New Delhi.